Hey everybody, welcome to the morning market briefing. It is Tuesday, Tuesday, September 13th, 2022. Hope you are doing well out there. Lonely call today. Ben and Tom are down at Georgia Tech doing a recruitment event for Georgia Tech students that sometimes come up here and intern. If you've been a longstanding client here, you've probably met several of those interns. So we have good relationships down there with the student managed investment fund committee, whatever they call that bad boy down there, where they manage money for part of the Georgia Tech endowment. So they're kind of down there on a peacekeeping mission, trying to make sure the tech nerds don't get too riled up and keep everything kosher down there. But anyway, just me today. Interesting today because we do have the CPI data coming through. The 12-month CPI headline number slowed to 8.3. If you remember yesterday, we were talking about this. The expectation was for something in the 8.1 range. We still came in at 8.3, so a little bit higher than what was expected. That being said, previous reading was 8.5, so there is some strength as it relates to that. That's relatively positive. Hard to get too worked up on some of that data. And then on the core CPI side, kind of as expected, folks, we came in pretty hot, coming in at about looks like we're at 6.6. Trying to read all the data here and navigate while my computer is also 2% battery. So bear with me, and we may just really guess on some of this data in a little bit. But overall, I mean, thematically, a little bit of a divergence, I would say, from what we expected yesterday, or kind of what our baseline view was. I think we talked a little bit, Tom, especially about the convergence between kind of that headline number and the core number. We thought that we might even see something in the sevens on headline CPI number. We thought we might see a little bit of progress there. On the core number, we thought that we would probably continue to tick up kind of to that mid-6 range, which is kind of where we saw. So, definitely kind of a mixed bag, I would say. So coming in at 8.3, again, a little hotter than expected on the core number, coming in a little bit higher than expected on the core CPI number, is kind of interesting. Not as much convergence as I would have expected. I think the biggest thing, though, and I think Ben did a good job of highlighting this yesterday, this is a number that is going to be very much in flux as the narrative continues to unfold. I would continue to expect to see potentially a little bit of an uptick as we move into the September data. Again, this was a slowdown in August. So keep in mind that this is very much a developing situation. It's probably going to evolve. We're continuing to see people react and even overreact at times to some of this data. What's interesting to me, at least right out of the gates, is really not much of an impact on equity markets, not yet. This data has been out for about 5 minutes. Sometimes we see a little bit of a move during the length of the call, but when we started the call, S&P futures were up 66 basis points. They're up 67 basis points right now. So we'll kind of continue to check back on that. Another data point we have that we tend to look at quite a bit is the fund manager survey. Interestingly, we are looking right now at still just continued robust pessimism from this survey data that we look at on an ongoing basis. Right now, cash levels within funds are at their highest level since 9/11/2001. We're at 6.1%, up from 5.7%. Very significant heavy cash positions. This is a record overweight for cash and a record underweight for stocks. So 62% of portfolio managers are overweight on the cash side, 52% underweight on the stock side. Staples is the most overweighted sector right now since its time period of 2008. So when you think of kind of these more conservative, more blue chip, more potentially defensive consumer facing companies, you can see here that this is just a really, really bold flight to safety. And that's kind of what we're seeing things positioned right now. People are selling tech. People are buying some banks. Very, very low risk appetite overall. So a little bit of a struggling position. people just continue to be a little bit pessimistic. If you wanted to make contrarian trades, right now you would be probably buying stocks in general. Again, the market is severely underweight on equity. You want to be taking opportunities to buy things cheap. You'd be buying Europe. That is certainly not something that we would necessarily recommend. We continue to think Europe is, for the most part, in shambles. You'd be buying tech. You'd be selling staples. You'd be selling commodities. You'd be selling energy, some of these sectors that have held up pretty well. And so that would be kind of the way to be positioning a portfolio to take advantage of this. Interestingly, I wouldn't necessarily say that we would be recommending those contrarian trades, but we are pretty intrigued by some of the sectors that have been relatively neutral. We've been talking a lot about the healthcare space, really trying to figure out what's going on there. There's a number of companies that just have not moved, have not responded in any way. So there's always opportunities, and I think that's the biggest thing that I would be asking Ben and Tom if they cared about you guys right now, what they would be looking at right now. But that's kind of where we are. We do have an investment committee meeting today, and so I'm sure we'll have some talking points to bring out of that tomorrow. Oracle revenue actually held up fairly well, but there are some concerns about softer margins. This is kind of that legacy tech space that we've talked, I feel like, a decent amount on these calls, where they're selling a little bit more business to business, a little bit more resiliency for the economic cycle. This is a stock that's up ever so slightly pre-market. Of course, it's up roughly in line with what futures are, so it's hard to necessarily write home about it, but it did hang in there pretty well. The applications and software business performed better than the hardware business. Analysts are going to like this because it seems to talk a little bit more about kind of that newer side of the tech. EPS did miss slightly, came in at 103 versus an expectation of 106, but earnings quality really was more robust and higher than we've seen in quite some time. And so a relatively good quarter for Oracle, the only real individual company news that we have coming through today. But they kind of held their own and are relatively well positioned. My computer's about to die. Those are really the only three stories we had for now. We're going to break down the CPI report, I would imagine, today in the investment committee meeting. My computer is lagging so slow that I can't even get the granular stuff, but we will break that down probably today in our meeting and then come back to it tomorrow for a little bit of a deeper dive on where we saw specific movements. But again, thematically, I don't know. I don't think this is quite as encouraging as the market is taking it. The fact that we're seeing relative resilience, at least as of right now, on futures, unless my computer's just, okay, now we're getting the update. All right, no, this makes a lot more sense now. Futures are lagging now. So now that we're getting the update here, futures selling off. And I think that makes a lot of sense. And that was kind of the one thing that was really giving me pause and making me scratch my head for a minute, because I just was not seeing futures move, but they are moving now. Right now, Dow futures are down about 1.1%. NASDAQ futures down 2%. So if you think about the more tech-oriented company and you wonder why they're selling off, computer's dead. If you're wondering why they're selling off so much, the narrative here has really come back completely full circle to where we're concerned about inflation again. We did not hit that 8.1 headline number. We were higher than expected on the core number. Inflation is running hotter than people expect, which means they're going to continue to have to raise rates faster and faster and faster, or at least at the same pace for longer if you're the Federal Reserve. So that is something that equity markets are not necessarily going to like. They're not going to like the fact that borrowing money is going to go up significantly. They're not going to enjoy that, especially for these more growth-oriented companies like you see in the tech sector, like you may see on the NASDAQ. So a little bit of a surprise there. Again, to reiterate, we did finally get some movement showing up on the old monitor here. But
2 weeks into college football, you're in a hot take.
Oh, 2 weeks into full college football. Well, that's actually a great point. I did want to talk to everybody about fantasy football. We have the Narwhal Fantasy League. Logan, how'd you do this week?
Not good.
Logan says not good. It was a bad week on the scoreboard for Tom, and I think it's probably why he's not here. Tom put up 86.8 points. I put up 144.72. So not great for Tom. Ben did okay, 118 points. Oh, he played producer Logan. Hot Dog City is his fantasy team name. Who knows? But so that's going on. A hot take on college football. I think Alabama is legitimately bad offensively. I think people are probably think the reaction to the Texas game is an overreaction. But if Bryce Young is your leading rusher and he's a quarterback who really is not all that comfortable running the ball, that's a problem. If you don't have any receivers with catches longer than 25 yards, that's a problem. If you're really, really excited about getting a transfer to play running back from Georgia Tech, that's probably a problem. If you got a lot of holes in your offensive line, that's probably a problem. Alabama's, they don't have it. I think we may actually look back at the last 2 years and say, wow, outside of that butt whooping they put on Georgia in the SEC championship game, really 2021 was the beginning of the downfall of that program. I just don't think they have it. They've not reloaded at receiver. Jermaine Burton that came from Georgia. I mean, I wish him all luck. I don't care really how he does. I hope he does well for his sake to validate his decision, but he's got like 7 catches for 45 yards in 2 games, and he's supposed to be a big play threat. I think Alabama's got real problems. I also think Kentucky is probably the most overrated team in football right now. I said it to one of my group chats with some of the guys here actually at the office on Saturday. Whoever wins the Kentucky-Florida game is going to be massively overrated. And Kentucky won. They're massively overrated. So kudos. That's a tradition unlike any other. That early season Kentucky-Florida game, the last 3 or 4 years, people have just read way too much into. So there's some hot takes. There's only one good team in college football, and it's Georgia. So that's been the case my whole life, but people are finally realizing that. We're going to wrap it up there. We'll be back tomorrow at 8:30. Hopefully some other people will join us, and we'll break down CPI stuff a little bit more.